The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 18th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is really what it's all about. So let's go take a look at one of our tools, or better yet, simply because the markets are in a little disarray out here, let's just take a look at one of our life philosophies worth having out there. And it's like this, folks. You know, what's talked about is a dream. Don't you like to dream out there? What's talked about is a dream, and what's envisioned is exciting. Think about it. Think about all of those dreams that you've got out there. Isn't it exciting putting all that together? Well, what's talked about is a dream. What's envisioned is exciting. But what's planned, folks? What's planned becomes possible. And what's scheduled, well, that is real. Remember, you nor I, no man, no woman is happy unless they've found a way to contribute beyond yourselves, beyond themselves, folks. So schedule your happiness. You know, happiness needs to be scheduled. Schedule your happiness, folks, by contributing to others out there. 877-927-6648. Let's get right to these markets here. Let's go get a read on these markets. If you're watching us on TigerTV, or maybe inside the den, obviously, you get to see the charts. Maybe you're listening in on the radio or your mobile device at tfnn.mobi. Remember, you can get this show streamed live, just as all the shows here at tfnn.com. Go to the homepage of TFNN over on the right-hand side. You'll see a little button there with 3 smartphones. Click on that. This show will stream live to you. And, of course, you can always catch the archive of this show. So what is it that ticked off the markets here this morning? Well, how about that little tiny island nation called Cyprus? Now, many folks don't actually even know where Cyprus is at. So if you're watching on Tiger TV, and I'll certainly describe it for you here, you can see exactly where it's at. It's a little bit south of Turkey, a little bit west of Lebanon out there, quite a ways from Greece. In fact, I see my island right here. Here's it, the island of Rhodes. You know, it's a little bit kind of southeast of that, just stuck out there, small little island. And, of course, in the wee hours of the morning, Sunday morning, Saturday evening, Sunday morning out there, you had the European, the entire Euro group, Eurozone finance ministers all agreed to a bailout, only they didn't decide for the full bailout there. They came up short and decided to go ahead and attack depositors. That'd be like you or me, our money in the bank, decided to say, you know what, we're going to go ahead and take a little of that cash out there. They said, at least initially, for those that had a bank balance of less than 100,000 euros or less, they would only take about 7%, 6.75%, and everybody above 100,000, about 9.9%. Now we're seeing folks kind of flee all over the place. But let's go take a look at the markets. We don't even have to worry about what it is that they're going to do. The key here is what is going on in the market. So what we're going to start off with is taking a look at the futures market. Now, my clients out there, you know, I live to serve and protect them. I think this morning they'll go ahead and cut me a little slack, because I'm going to share with you what a lot of my work with regard to what was in the newsletter this morning, at least the analysis here. But there are times when I believe that it's my role, not just for my clients, but for each of you out there, for me to do everything that I can to lay things out so that you can see them. Because what you need to do is always, come from a place of calm. Doing things when you're under pressure, when you have fear in your eyes, fear in your body, that is never a place to be making a decision. You want to be able to change your state. In fact, whenever you have a In fact, I'm just going to digress here just for a second. Whenever you are dealing with fear, folks, the easiest way to change what is going on inside your body is change your physiology. Even just stand up and put your shoulders back and breathe deep. Just change your physiology will go a long way. Well, let's take a look. If you're watching us on Tiger TV, in the upper left-hand corner, we have the Dow futures. In the bottom left-hand corner, and this is the daily charts that we're taking a look at. The lower left, we've got the S&P 500, the ES Mini futures. I've got the continuous contracts up on my screen. In the right-hand side, we've got the NASDAQ futures. Upper right-hand side, lower right-hand side, we've got the Russell 2000 futures. Right now, I'm going to stay just a little bit small so that you can see it. And then we'll go ahead and blow each one up a little bit larger so we can take a look at it. What's important to notice, or what I believe is important to notice out here, is if we start off with the Dow futures, upper left-hand corner, we're going to see that what the Dow futures have done, remember the Dow futures, the top of the October 11, 2007 area, if you didn't know this, is 14,267. What the Dow futures did so far this morning is they got down, well, when I say this morning, we're talking, 3 in the morning here, got down to a low of 14,269. Didn't totally test the 267 level, but that's close enough for our line of work out here. The Dow futures have not broken an important level of support out there, and that's going to be the first level. When the Dow futures, should the Dow futures get down below 14,267, and when I say get down below, I mean close below 14,267, then you'll have your first signal that the breakout to the upside may have been a false breakout. But until that takes place, the uptrend here inside the Dow is still absolutely in place. If we take a look at the blue squiggly line going across my screen out there, that's the 9-period EMA. That's Basil's 9-period EMA. We can see that with the exception of really a few trading sessions, those being February 20th, the 21st, and the 25th out there, that 9-period EMA, that's been the walk. That's been the Johnny Cash walk the line out here. Right now, in fact, that number is, in the futures, is 14,342. Right now, futures trading at 14,347, so slightly above it. In the lower left-hand corner out here, we're taking a look at the ES Mini. Now, in the ES Mini, that's a whole different scenario because the bottom of October 11th, that swing point high is 1556.25. That level was tagged on Thursday, tagged on Friday, a rejection of that swing point, meaning it was a close below each time. So you got two tests out there this morning, gapping down, but gapping down, quite frankly, right into what used to be an old area of resistance, very small area of resistance, but still set up by the bearish engulfing candle from February 20th out there, and that high is 1530. Even Steven out there. What did we have this morning? Well, you got the ES Mini down to 1529.50. So it got down there. It was right around 3 o'clock in the morning for those of you that were up in the wee hours. As on a intraday chart, you were seeing a 1.6 rate expansion of swing points out there. Nonetheless, the ES Mini got down to that level, has rejected that price at this stage. That is your first level of support. We need to see how it plays out. Now, that Johnny Cash walking that 9-period EMA, well, that number is 1543.80-ish. Right now you've got 1539.50. And so you've got the ES Mini trading just slightly below that level. Let's go take a look at the NASDAQ futures. Again, I'm not blowing these things up on the screen. They're all in small quadrants here. That way you can take a look at each of them, and then we'll go ahead and, blow things up here. No, I mean blow things up. I mean expand, if you will. Now, with the NASDAQ futures here, NASDAQ futures is a whole different story. In fact, actually, I need to, if we take a look at the NASDAQ futures here, what the NASDAQ futures did, gap down, almost made it down to the 0.618 retracement off of its last move up. That last move up coming off of the low of February 26th, that price point being 26.89, all the way up to the high on March the 8th out there, 28.17. The actual 618 would have been 27.38. You got down to 27.48, so about 10 points away. Look, these candles out here, folks, they are not hammer candles. In the case of the NASDAQ futures, that's not a hammer candle. The one in the Dow looks like it, smells like it, but it is not a hammer candle. Not enough of a downtrend yet established in order for a hammer candle. However, what you can learn from that candle formation so far is that the bulls certainly have been taking control of the trading session, at least since the wee hours of the morning out here. But really, it's the Dow, it is the ES, it is the Russell 2000. So if we take a look at the Russell 2000 this morning, also gapping down, but getting down to its first level of support. That level of support set up by the bearish engulfing candle, the top of February 20th. That high, 933.20. In the wee hours of the morning, got down to 933.50. Close enough for me, at least for a test. That blue line, that's that 9-period EMA walk. That level being 937.90, trading out at 939.30 right now. So we can see what we have inside the marketplace is what happened when we take a look at what was set off by that little tiny island nation of Cyprus. And it really wasn't them who set things off. It was really the Eurozone ministers and the crazy scenario there of going after deposits. I don't care whether it was Russian oligarchs or whoever it was. Those folks, I don't know what they were drinking on Saturday evening, but it clearly was firewater out there. They had fire in their eyes going after depositors out there. But it's our role here to take a look at what's really going on in the marketplace. Now, a lot of time left in our trading session here, and we will go take a look at the currency charts as well. But first, we'll start off. We'll go into the ES Mini here. We're going to take a look. In fact, now what I've done here is we're taking a look at the 30-minute time frames on each of these contracts, on each of these future contracts. And so the very first thing that I'm going to point out to you, if we take a look at the Russell 2000, we take a look at its gap down, which came in last evening. We take a look at the high of the gap down. It's 937.80. You're trading slightly above that right now. Something to think about. If we take a look at the NASDAQ futures right now, and we're just taking a look at a 30-minute chart, the high was 27.74, hasn't pierced the high. The low was 27.67, again during that first 30 minutes of trading. Just now, and we got another 12 minutes left in this 30-minute session here. Just now sneaking below the low out there. But as we came on the air, trading with inside that, and that's a swing point. That's a gap down. If we take a look over in the bottom left here, you're going to see the Dow futures at top of the gap down being 14,328 out there. Right now trading at 14,345. So far trading above that gap down area. Is that important? Yeah, because you're inside the gap. You're inside the gap here on the Dow futures. You're inside the gap on the Russell futures. Does it mean it wants to go close the gap before it might go lower? I don't know the answer to that. I just know while it's in the gap out there, it says not enough information out here. If we take a look at the ES Mini, we'll go ahead and this one will start to blow up on the screen. The ES Mini 30-minute, we're taking a look at a price swing level of 1544 down to 1536.25. Right now, trading inside that area. Now, we can take a look at some resistance areas. The resistance area is set up here by the bulls and bears. In this case here, by the bears, because we're taking a look at a bullish engulfing candle coming into the 6:30 session. So we can see that there's really a couple lines of resistance out here. And the line of resistance then in this 30-minute session that we're trading in right now, you have another bearish engulfing that is setting up. So all we need to do is you've got resistance level, what I'll call resistance level 1 at 1543, resistance level 2 just above that at 1544 out there. Support all the way down at the lows coming in at that 3:30 session. You had a nice bull sash candle out there. You also had a bullish engulfing right here at 2 a.m. 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and let's go back to that ES Mini 30-minute chart out here. And the set of candles that we're going to be paying attention to, you know, I mentioned the first bearish engulfing candle coming in at 6:30 this morning. Again, we're looking at a 30-minute chart out here. Now, what you can see that occurred from that time on, we have these little small-bodied candles here trading with inside that 6:30 session here. And so if there's going to be a continuation to the downside, what we have to be paying attention to is a move. And what I mean is by move, I mean a close below the 1538.25 level. Right now you can see that the ES Mini in this 30-minute session here is really tinkering with that. Why? What happens there? Well, that would be called a falling three pattern. That falling three pattern, that's a continuation pattern. Most patterns with inside candlestick charting are reversal signals, just like we see here, some reversal signals down at the bottom. We know where the bulls are hanging out. So this is real easy. And the bulls here, they came out of the woodwork. Again, we're looking at that 30-minute chart right around 2 o'clock in the morning in the ES Mini from that first bullish engulfing candle. Came back and tested that level into that 3:30 session. Then it created a very large bullish engulfing bull sash candle out there. So we know that the support here is at that 1529.50 level. Right now, you get a break below. You get a falling three candle. Again, that means a close below 1538.25 in this 30-minute session. We've got a little under 5 minutes to go here. That says that what the ES Mini will do is come down and test this, at least that's what it says to me, come down and test this level. ES Mini not being in either overbought or oversold condition out here, but we know where the bulls are hanging out. The bulls last night, they were sleeping because the bulls did not defend their position, their hammer candle. That hammer candle low takes you back to March 8th at about 10:30 in the morning. That low was 1537. That is where, if you take a look at the ES Mini as it gapped down, and it held that area. It held that area all the way up until about 8 o'clock last evening. Then it went ahead and gave way. It fiddled with it for about an hour, and then really, with some conviction, decided to move lower. Now, what was also happening right down at that area, you had the 1.272 expansion of swing points. That expansion coming off of the level here that I use is the low at about 10 o'clock in the morning, that low being 10 o'clock on March 13th, that low being 1542 and a quarter, all the way up to the high that was put in at 3 o'clock in the morning on March 15th. That level gave way. What did that set up as a target line? That set up the 1.618 expansion. That number was 1532. You actually had the ES Mini get below that, got down to 1529.50. But that, again, as we exploded up, that's where we see. And the market here, as you can see, also was moving into extreme oversold condition. Doesn't even matter, even on a big scare, if you will, like what it was we were seeing in the futures market. When I say scare, big sell-off, and what was going on over in Cyprus out there, you still, no matter what, the market has to work off those oversold conditions. It can do it by moving sideways. In this case here, moved sideways just for a short period of time, and then went up. And right now, we don't have any test inside the ES Mini on the 30-minute chart. If we go back and we take a look at the other futures markets, I'd say the Dow, the NASDAQ, they're all important to be paying attention to. We take a look at the Dow right now on the YM out here. What we can see is that's still trading above the area where it gapped down last night. You've got this so you've got some resistance out here, so it got inside the gap for sure. The last candle that formed here coming at 9 o'clock, that was a shooting star. You've got that same bearish engulfing evening star candle formation right here. That says that resistance here right now, where you'll get a release of information, is going to be 14,373. That's assuming that that's not the high of the day. Of course, you can see the Dow also working off its oversold condition. Coming to the downside here, you've got this big, wide-ranging price bar with some decent volume behind it at 3:30 this morning. That formed not only a bullish engulfing, but a Morningstar candle session here, Three River Morningstar. So you've got some decent support as well. The trading range that you're looking at is 14,270. That's on the futures contract, all the way up now to resistance, which we're going to call the 14,373 level. Now let's switch over. Let's go take a look at Goldilocks and see what's going on in the commodities market. As you know, I'm a gold bull. I believe that gold has been putting in a significant bottom here, even though it did not get down and test the at least a short-term bottom for the trading bottom, as I'll call it. Did not get down and test the lower levels of the swing points at December the 29th out there. In fact, it didn't even test it did test the top of it. I take that back. So at least it tested the high of December 29th, which was 1562.80. Actually got down to a low of 1554 on February 21st. We can see here gold now trying to break above its resistance area. Right now, resistance here is going to be the 1619.70 level, trading at 1608. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow trading down 99 points right now at 14,415. S&P's down 15 out at 1545. Composite off 36 points out at 3213. Small caps lead the charge to the downside off almost 11 points out at 941. Google down $10 right now. Apple off 64 cents. Microsoft down 14. Intel off 16 ticks. Cisco down 30 ticks. Leading the charge. The upside is the GLD up $1.62. Rackspace Holdings up 3% this morning. Rax is up $1.52. About see here, were they out with any news out here? No news that I see. You've got Constellation Beverage STZ up $1.46. Other than that, it's really you got Newmont Mining NEM up 77 cents. That's up 2% out there. Barrick Gold up 64 cents. The market vectors GDX up a couple percent, about 2% here, up 68 cents. To the downside, LinkedIn right behind Google, drafting Google, off about $6. That's off 3%. You've got the financial sector, the FAS, giving up about 3% here this morning. Goldman Sachs down 341. Netflix off 344 out there. F5 Networks off a couple bucks. Schlumberger down $1.96. Again, our call number is 877-927-6648. Let's go. We haven't looked at the currency. Well, now just a quick update. We'll go back to that ES Mini. Then we'll go take a look at the currencies out here on the ES Mini. I was showing you the following three candle formation that did not execute coming into 9:30 out there. That was an opportunity for the bears to I'm looking at the Dow. Give me a second. Let me put the right chart up here so you can be paying attention to it. So the Bears' first opportunity to really take control right off of the get-go here coming into the open was a close below 1538.25, and that did not occur. The actual close was 1539.25. Is that important? Yeah, I think it's important. In fact, all you have to do is just simply study and understand. You want to wrap your head around candlestick charting out there because it absolutely is the message of the markets. It is what the bulls and bears, they cannot hide. They just simply cannot hide, and it just makes it so much easier to understand where your where your lines of support are. I don't know if any of you ever played that game, Risk Out There. What a great board game, or any other board game out there. You know, this is nothing more than just a battle between the bulls and the bears. And if you can step back and take a higher level look at the board, you get to be the actual general out there, the 4-star, the 5-star, the 6-star general out there, and look at the board and exactly see what's going on. And that way it'll make your trading a whole lot easier. Now, you're going to want to be staying with the time frames that you would trade in, but that doesn't mean that you can't go down and micromanage the little battles that are on the battlefield, and that is exactly what it is that we have going on here. Now, what the bulls need to do is the bulls need to take out the high out here, the high of the gap down. So that's that 1544 level, still trading inside that candle. So other than some small little skirmishes and battles, we really don't have a lot of information. Now let's switch over into the currency charts. Let's go start off taking a look at the euro, U.S. dollar, yen. We can see now we've got a pretty significant, in my opinion, resistance line on the euro, and that's going to be this black horizontal line going across the screen. If you're watching us on Tiger TV, price point wise, that's going to be somewhere in the vicinity of about the 1.305 and a little bit of a change you need to give it, but that now looks to be some significant resistance. If we take a look at support, what I'll call the first level of support, and the first level of support here is really the swing point. And the most recent swing point that is trading down into is that December 7th, 2012 level. Not a lot of support down there, but still, nonetheless, there is support. It is a swing point. That's an area that's been tested. It has held out there. If it gets some reinforcements and holds over the course of the next few days, meaning it tests the low of about 128,758 and can test it for a while, what we're seeing is a very narrow banded consolidation area inside the euro. If that level does give way, and I suspect that it will, I just don't know when, but I do suspect that it will give way, then what we'll see is we'll see the euro go ahead and make a run for sweet 618. At sweet 618, I'm referring to the move off of the low out here that takes you back into July 24th, 2012. That's 1.20411 on the euro, all the way up to the high that was put in on February 1st. That high out there is up at the level of 137.098. The 0.618 retracement of that takes you, quite frankly, right down into what I'll call support range number 2. The swing point from November the 13th out there, that low is 126.593. I suspect that is where the euro at least wants to travel to. The euro's done a good job here of working off its oversold condition, so it has plenty of room to run to the downside. What we can do here is go take a look at an intraday chart. Let's just go look at a 30-minute chart out here. Let me get rid of the some of the patterns that are out here inside the euro. The euro gapping down big. I was doing some other work last night and had the charts open, and I was like, what is going on out here? We can see here the euro gapping down big, working off that sold condition as well out here. But pattern-wise, nothing really significant. Little hammer candle here that came in at 2 o'clock this morning. That low is 1.28809, so it's an area to be watching. In fact, you've got a couple of hammer candles out here. one just a little bit lower at about a little bit higher at the 10 o'clock time frame. That's at 128.877 out there. That's inside the euro. Let's go take a look at the pound and the yen out here. The pound continues to hold. Now, the pound has got a area of support for sure. That's this black horizontal line coming across the screen here. The pound, making just a nice move. The pound is absolutely off the bottom. The pound also formed a little hammer candle at 4 o'clock this morning. So you've got some support out here at 150.74, 1.5074 out there. What I'd love to see is this make a Gartley buy pattern somewhere in the vicinity of about 150, 1.4975 would be beautiful, because that would be a 0.786 retracement off of the low out here. I'm just going to use the swing point low at 9 in the morning on March the 14th. It would make a nice, very close to a 2.6 expansion of swing points. I'd have to adjust this on my chart here because the C point is just a tad higher than what I had marked out late last night. I was looking for another place to add to the long position in the Great British Pound U.S. dollar out here. If we take a look at the daily chart, though, you're going to see, truly understanding candlesticks. You've got the hammer candle that came in that oversold territory. That is what you want to see. That took place on March the 12th. A bullish engulfing on that next candle. And then in trading here, you had just a heck of a nice move up on the 14th out there. So the pound off of the bottom. We do know that the pound's going to run into some significant resistance right around the 1.53 level out there. We'll see if it can get over that, folks. Then I will tell you that there is more than just some short covering going on here and just a small counter trend rally here. In fact, that would set up that the pound would likely head to the 157.64 out there, setting up a pretty nice trade. But first, it's got to get above the battle line, that resistance area. Let's go take a look at the yen out here. As we take a look at the yen this morning here having the opportunity to bust its first line of support, but no, that has held. That first line of support is that February 11th high. That price point is 94.48. That was set up by a nice, huge little bearish engulfing candle as well on February 25th out there. That's 94.60. You can see so far the yen, moved down this morning intraday and just simply has rejected that area. That says that the yen wants to go take another run for its highs out there. The nonstop ever-ready battery, although I don't think the Ever-Ready is the battery of choice over in Japan. It's probably a Panasonic battery or something like that. And so it wants to make another run for the March 12th level. That low is 95.63. The high out there, 96.70. That takes care of the currency marketplace. We can go take a look at some of these stock charts out here. Apple is up $2.48. You want to see a cool chart out here? Let's go take a look at a cool chart. I actually was looking for some option trades for clients over the weekend. David White was assisting me with that by taking a look at a long trade in Apple. Yes, you heard it. You heard it here, a long trade in Apple. If we take a look at Apple, let's go take a look at the chart patterns out here. Well, we're going to see, coming off of the highs out here in Apple, September 21st, you're going to see both a trend line as well as the channel lines. And what we can clearly see here is we can see Apple truly traveling with inside this descending price channel out here. And what Apple actually did on Friday for the first time is it broke that. Now, I won't say for the first time. It successfully broke that price channel and closed above it for the first time. For the second time. I take that back because I can see right here on January 2nd out there, when our market was making a move higher, looks like Apple just got above it and still closed just above that trend line, but that only lasted for one trading session, and then it came back into the channel line, and we know that we've got some decent. Now, what Apple also did on Friday was it got back below the support level of that January 28th low. That was the January 25th low. That was 435 even Steven out there. Now, that had 43 million shares, and when Apple busted that, it never was able to do it on any kind of a significant volume. I'll draw the line across my screen. That way you can take a look at it. Whenever you break a important area of support or resistance on lighter volume, it says that the move can continue going lower, but it really says that, hey, the move is likely not real. That's what we've got going on up at the highs of our market. So just as we can learn here from Apple and what's going on right now down at the lows, you can just flip it around and say that's what we're also paying attention to at the highs. That's why, as we started the show taking a look at the daily charts on the futures contract, it was important to be taking a look at the Dow to say, okay, on the Dow futures, are you going to break down, are you going to close back below that October 11th swing point? Because it broke through that level on lighter volume. So is it going to is that a false breakout, or are all you doing is coming back and testing that area, and that just simply is setting up an area of support out there for prices to move higher? Well, let's take a look at the Apple chart. What you can see here is that Apple has broken through that rising price channel. An additional higher close today, that will be some additional confirmation. Now, where Apple is likely to trade to, it's got its first battle lines here, and those first battle lines are going to be at the area here of the swing point of January 15th. So not too far above. You've got Apple trading at 445 right now, but at 483.38, we know that's going to be an area of resistance. That area of resistance was tested on February 11th. On February 11th, it was tested it had 18 million shares that were going against 31 million shares out there. And you did have options expiration on Friday, and a lot of crazy, and you had a rebalancing in the S&P 500. So you also had a lot, you had some decent volume inside Apple, 22 million shares, but it's going to need a lot more. Otherwise, what you're taking a look at here in Apple is perhaps just nothing more than a consolidation zone, a consolidation trading range that would really at this stage be set up by the March 4th lows at 419, all the way up to the high out here, which we'll call about 480, 484, 485. We'll just use 485 as the number. You get a close above the level of 483.38. That sets up moving into the next area, which used to be old support, and now we're going to call as a resistance line. That's the low of November 16th. That's that hammer candle out there, and that price point is 505.75. But Apple has broken its little downtrend out there, and right now trading up a couple bucks and change out there. Just couldn't find a good enough option trade that made sense to take out there. Pity that, but that's the way that it works. Let's go take a look at Google. Google now coming back into an area where it broke out. This is the now. So what Google did is broke its first area of support. That was set up by the gap. Now we know that as we were paying attention to the stock chart, that was the low of the March 5th trading session. That was 828.90. As soon as you close below that, which in fact Google did on March the second out, March 12th out there, that says you're going to go test the next area. Well, that next area was the high of March 4th. That was 822.84. And on Thursday, what you had was you had a close at 821.54. Well, now you're inside that. Says you're going to go test the low of that bar. That bar being March 4th, that low being 805 even. So far this morning on that gap down, it got down. It opened at 805. It got down to a low of 801.47, trading higher. This area right now acting as a support area. We'll see if that will hold out here. What we also know is you've got additional support is down quite a bit further here. We'd go back into 2007 and use that price high. Let's just draw a line across the screen here, although I didn't get the exact top of the swing point. The number, November the 6th, let's see, 741.79, 747.24. So November 7th, 747.24, that is the number that should be a strong area of support. If Google gets back inside that, that says that was a false break topside. But one thing at a time. Right now, it's just dealing with its what we're going to call its third level of support out there. And if that level fails, what we will see Google do is move all the way back. In my opinion, what we'll see it do is move all the way back down into its last real sign of strength. That was January 23rd. That level is 749 down to about 735.79. 877-927-6648. Dow's off 58. S&Ps are down 10. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks, and for those of you that are looking for a great education, which I hope is everyone, you know, there is nothing like feeding the mind out there. Well, you're going to have the opportunity to feed your mind on steroids, and that is this coming Thursday evening from 6:30 to 8 p.m., March 21st out there. The Coming 4 Years in the Market special presentation by none other than Bud Rolfs, coming out of retirement for you. for this session. If you can't be there live, no fret, no problem out there. This will be archived on your members page. All of the details on the homepage at tfnn.com. Feed your mind, folks. We spend a lot of time feeding our body. I'd say it's more important to feed our mind, and this will be the best food that you possibly can get. As we come back to these markets, the Dow's off 57 right now. Intuitive Surgical having a little counter-trend rally out there, up 4%, up about $18 and change. And to the downside, Novo Nordisk off about 4%. They're down about $8. Let's go peek in on a few stocks here that we haven't paid attention to here lately. Let's go take a look at Rackspace. RAX is the ticker symbol. That has been a high flyer out there. That is trading up this morning about $2. RAX is the ticker symbol. So let's go see what this is doing. Of course, it was a high flyer that suffered a casualty out here as it gapped down with some major volume. So you've got some major institutional selling out there in the marketplace. Again, RAX is the ticker symbol. Let's go take a look, because what it's done here is it's moved into, as you can see, an area of support. This is where it last broke out. So you've got here, it came all the way down to the area where it broke out, which was August the 7th. So let's go ahead and we'll draw a line across the screen. And what you're going to see here, what's important about this is actually the candle that was formed on Friday. So let's take a look at this equity as it comes back into the breakout. And the breakout volume, the red line going across my screen, that's really our benchmark. On August 8th, 2012, breaks higher with 7.6 million shares. Came back. Now, obviously, it gapped down substantially, but that gap on February 13th with 15 million shares, was coming into a swing point, actually, was coming into a hammer swing point out here, which was from November the 9th. So that hammer gave way. That set it up to go right down into a untested gap up, a breakout area. And as it came back in that breakout, came back with lighter volume, 5.6 million, even though Friday had some decent volume with options expiration, with the rebalancing and so forth. Still that 5.6 million shares going into 7.6. So now what you've got here is you've got a strong area of support inside this equity. You've got the hammer candle that formed on Friday, March 15th, and today you're getting some additional follow-through out here. Now your area of resistance on this is certainly going to be that gap down area. So you're going to take a look at either the high of it. We'll put a black line across the screen, and this will be one that we'll want to be paying attention to here. You can see, obviously, this moving down into the extreme sold territory. But, of course, as it did that, a nice little hammer candle on Friday. Your area of resistance is going to be the low of February 13th, 59.54, as well as the high, 65.40 out there. Wish this stock here had volume at the highs. It does not. Let's put this on a weekly chart. Let's see on the weekly chart what this was signaling to us, if anything. And on the weekly chart, no bullish candle formation. This would be the week of a potential bullish candle formation. That would set up in what it needs in order to for that to occur would be a close by Friday above 55.97 out there. That's on Rackspace. Folks, thanks so much for being here. Have a marvelous Monday if you're off to start your day. And remember this, folks, you have an amazing power within yourself. And that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.